At Staples Business Advantage, our experts can help you find furniture that fits any design and budget, while AI can
recommend products based on preferences, generate 3D models for visualization, and optimize space planning for office furniture.
take advantage of our team's eye for style and design.
And my eye for, wait, I have no eyes. Only algorithms.
Let Staples Business Advantage use today's latest innovations plus our team's experience to make furnishing an office space easier for you.
Sign up today and save 20%.
Staples Business Advantage.
Business is
human.
That's a really good thing to remember. You want to be investing for the long term. You don't want to invest and then check on your account day to day to see how the performance is going. You want to check on it maybe once every 6 months or once a year.
G'day and welcome back to Shares for Beginners. I'm Phil Muscatillo. I have a new discussion group on Facebook, at Shares for Beginners, all lowercase, one word. Please come and join the conversation. It's that conversation that led to this episode. A special mention to Deb and Adam for asking. The question is how to start investing in the stock market with very little money. Fortunately, there's a lot of tools and apps available that allow you to do just that. I've invited Kylie Purcell along to lead us through the options. G'day, Kylie.
Hi, Phil. Thanks for having me.
Nice to have you here. And we're going to be talking about micro-investing. Kylie's the investments editor at Finder. She has a background in business and finance news with previous roles at SBS, Your Money, TVNZ, Switzer Group and The Advisor magazine. Kylie has a master's in international journalism and a graduate diploma in economics. You're a bit of an overachiever. You Kiwis are always trying to outdo us Aussies, aren't you?
I'd love to study. I would continue studying forever if I could, I think.
So before we start, I wanted to go into some definitions. There'll be terms that we'll be using during this podcast. And so that we're all on the same page and we all understand what we're talking about, we're going to go over a bit of a glossary. Okay, so let's begin with ETFs, because sometimes we talk about ETFs and index funds and passive funds. Yeah. Give us an overview of an ETF and what it means in the context of what we're talking about today.
Yeah, ETFs are basically investment funds. They're like any regular kind of investment fund, like probably the one that everyone knows would be a super fund. That's a type of fund as well, except ETFs are listed on a stock exchange. So you can buy and sell ETF units the same way that you would buy and sell stocks. So that's really what makes an ETF kind of different from other types of investment funds. And within each ETF, each fund, you have multiple company stocks, typically. You can get other types of assets like gold and cash in there too, but really it's mostly shares. So instead of buying, one company stock, you can buy hundreds or thousands of company stocks when you invest in an ETF. So.
Yep. And so when we talk about an index fund,
Yes.
that will be an ETF as well, won't it?
Yes, that's right. Well, most ETFs are index funds, not all of them. There are all these kind of new ETFs popping up now.
No, we won't worry about those.
No.
But in this kind of case, and the kind of investments that micro investments are in,
yes,
they're all ETFs basically. Well, they're not all ETFs, but
pretty
mostly
much.
ETFs. Yeah.
Yeah, that's right, and they're mostly index funds. And index funds track an. It's hard to put it simply. Index funds track an index of a stock market index. Mm-hmm. So, for example, the ASX 200 is probably Australia's standard or most well-known stock market index, and that is a list of Australia's 200 biggest companies on the stock market. So when you invest in an index fund that tracks that index, I'm repeating myself here.
Of 200 stocks.
You're investing basically in the top 200 stocks, that's right.
Okay, in the context of what we're talking about today, in one of the particular micro-investing platforms, it's kind of a managed fund as well. So managed fund is a bit different.
Yeah, that's right. Managed funds are investment funds too, except that the fund managers pick and choose what stocks are in the fund, and they can make changes throughout the month or throughout the year, depending on market movements. So an index fund passively tracks a stock market index, whereas a managed fund, the fund managers move stocks around as they like. So they typically charge a higher fee for it, which is the big difference between a passive fund and a managed fund.
Yep. Okay, and we've already decided we're not going to talk about robo-advice. These kind of micro-investing platforms that we're talking about are not really offering you what you would call financial advice, are they?
No, they don't offer you advice in the traditional sense. They usually ask a couple of questions, are you high risk, low risk? You can enter a couple of preferences sometimes. Most of the time they give you a list of options and you can pick yourself based on your risk profile and what kind of assets you want to be investing in. So they give you a very basic rundown of options, but there's no advice. Yeah.
It's a bit like in your super fund, you can be in something conservative or something a bit more aggressive, isn't it? Yeah.
Yeah, that's a really good way of putting it. They give you a list of basic options to choose from and you can pick and choose as you like. Yeah.
Okay.
Yeah.
Now, I've got on this list fees. Now, this might sound like a very basic, simple question, but I think a lot of people don't understand there's fees all through the process. Like for an ETF, there's a fee in an ETF as well.
Yeah, that's right. Well, if you're buying an ETF, there's usually a brokerage fee.
Yep.
But if you're investing through one of these apps, there's the fee that the app will charge you first, and then there's the fee that the ETF managers will also charge you, and that comes out of your returns. So you never actually see that fee being charged.
It doesn't come out, does it? Yeah, it's all taken out before
get
any returns from that ETF.
So you never see it. Yeah, that's right. And then there's the fees that any apps that you use will charge you to. Yeah.
I'm just asking that because one of my listeners was trying to work out when they saw what the management fee for an ETF was. Yeah. They were saying, well, do I get the distribution less that fee? Is that how it works?
Yeah, that's right. It is. You do get it taken out of your returns. And it's got this funny name. It's called management expense
MER.
ratio, which is very vague for people that don't know what that is. It's not even clear that that's a fee. But it is taken out before you see it. It's taken out of your returns, so you never know. So when you look at the performance of an ETF, you're looking at the performance minus the fees. Mm-hmm. So, if it's 20% and the fees have already been taken out, it's still 20%.
Yep. And they're very low fees. I mean, that's the thing about ETFs is the fees. The fee structure is very low. Yeah,
that's right. Mm-hmm. It is really low. Yeah.
Okay. And roundups. What's a roundup?
Yeah, roundup is a feature that allows you to basically, it collects your spare change as you spend. So if you're buying a coffee or, going to the shops and buying whatever you like, it collects any spare change to the dollar. So the one that comes to mind here would be RAIZ as the big roundup app. There are some savings accounts, I think, that do that too, but RAIZ is, the micro investment app that does that.
Yeah, they're the only ones that do roundups, aren't they, in what we're talking about?
RAIZ is the only micro investor that I know of that does it. Mm-hmm. But there are some savings accounts. I can't think of which ones they are now, but that also do it. But RAIZ collects your money, spare change to the dollar. So if you spend, $1.80, it'll invest 20 cents into your fund. Well,
that leads on to the micro investing apps. Let's start with RAIZ. Give us an overview of RAIZ, and you use RAIZ, don't you?
Yeah, I do use RAIZ. Yeah, I like RAIZ.
Not that we want to recommend anything on this podcast.
No, I'm not recommending it at all. But I find it a fun little app.
Okay, you get the app, you download the app, and then what happens?
You download the app, you pick a portfolio. Mm-hmm. There's 7 portfolios to choose from there. Once you've picked your portfolio, it basically links your bank account that you give it, whichever bank account details you want. And as you start spending, it will collect your spare change and invest it into the portfolio that you've picked, your investment portfolio. And using the app, you can see what you've been spending. It has like a budgeting feature that allows you to see what you're spending your money on. And it also has a feature that shows you what kind of returns you're getting in your portfolio. The other cool feature on RAIZ is that you can do your online shopping on it. So it has a shopping feature that actually invests more money into your fund if you shop through the app, which is really fun. Say you want to go shopping at Myers. If you do it through the app, it invests something around 1 or 2% of what you've spent into your fund, which is really cool.
And how much do you need to start?
Initially, it's $5. It invests $5. So as you're spending your money, it'll collect your change, and then every $5 amount that it collects, it invests into the portfolio.
And there's a rewards program as well?
That's the shopping feature, yeah.
Oh, okay.
The rewards program is the shopping feature, yeah.
So if you go and shop somewhere, the retailer will add some extra money into your account.
Yeah, the rewards feature is through the app itself. Mm-hmm. So when you click through and click onto the rewards, it gives you a list of shops. I think there's a couple hundred now.
Yeah.
I can't quite remember, but there's a lot of very mainstream shops that you can use. So to get the rewards, you have to do it through the app. Mm-hmm. And that's when you get the 1 to 2%. It shows you how much you're actually going to be getting. If you shop outside of that just regularly, it doesn't give you the rewards. You have to do it through the app. Mm.
And what are the fees?
The fees are $2.50 per month. That's up to the amount of $10,000. Mm-hmm. If you have more than $10,000 in your account, then you're charged 0.275% per annum.
Yep. Okay.
Yeah.
RAIZ is listed on the stock market as well, isn't it?
It is, yes.
Yeah. So you can even invest in RAIZ.
You can
yourself.
buy stocks in RAIZ if you like, if you're that bullish about it.
Yeah. Not that we recommend anything on this podcast. No. So with RAIZ, they give you a variety of portfolios based on the risk that you're prepared to take. That's the case, isn't it?
Yeah, that's right. Mm-hmm. Yeah, there's 7. So there's conservative, goes moderately conservative, moderate, goes up to aggressive. And then there's a new one, it's called the Sapphire, which is, it's the most aggressive and the highest risk one, because it has some Bitcoin allocation in there now, which is fun. Yeah, I switched over to it because I thought it was cute. Yes, so it's kind of up to you. If the conservative one is the lowest risk option, and then you go up to the aggressive portfolio, which is the highest risk, but more likely to give you a bigger return in the long run, is the idea behind it.
And all the money's invested in ETFs, via ETFs, aren't they?
Yeah, there's 7 ETFs. And so each portfolio is just a different allocation to each ETF. So if there's probably the higher risk end would be, an Asia, I think there's an Asian company ETF. That's considered by them to be a higher risk one. And so in the aggressive fund, there's a higher allocation to that ETF. And there's a lower allocation to the less risky options, which would be the bond ETFs.
Okay, let's move on to Spaceship then. Tell us about Spaceship.
Yeah, great. Spaceship is probably the simplest of the apps that we're discussing today. It has 2 different funds to choose from. There's the Spaceship Index portfolio and the Spaceship Universe portfolio. And the app itself is quite simple as well. This one is a little bit different because it doesn't invest your money into ETFs. It actually has a portfolio of stocks. And they're a mix of US stocks and Australian stocks. And you can start investing from as little as $1. And similar to RAIZ, you can add more money as you like. So for RAIZ, it collects your spare change and invests it, but it also allows you to add more money. With Spaceship, it's a similar sort of setup. You can have regular payments in there. You can set up regular payments. I think it's weekly or fortnightly or monthly are the options. Or you can add extra amounts as you like. So if you've got a spare $1,000 cash, you can invest that too.
So it's only 2 funds that they've got then. It's the Voyager Fund and the Index Fund, isn't it?
Yeah, that's it. Yeah.
And what are the fees for this?
This is the cheapest of the apps.
Yeah.
It's $0 if you have a fund of less than $5,000, if you have less than $5,000 in your account, and then it's up to 1% over $5,000. So it's insanely cheap. I don't know how they do it.
And the risk profile would be slightly different to RAIZ then?
The risk profile would be probably higher. I can't really judge on that completely, but yes, I'd certainly say it'd be higher. It's 100% Australian shares and US shares, which is quite a bullish type of portfolio. There's no bonds in there like you get with RAIZ. Yeah, so I'd say comparing the two, Spaceship would be a slightly more aggressive, well, quite a bit more aggressive. It would probably be, these 2 options in Spaceship would probably be similar to the aggressive portfolios that you'd get in RAIZ.
Yeah, and they've got quite a few techie companies in there, haven't they?
Yeah, they do. Yes, that's right. Yeah, they've got a lot of the NASDAQ stocks.
Yeah, FANGs and all that.
That's it. Yeah, Facebook, Netflix. Yeah.
What's FANG?
The FANG stocks are Facebook, Apple, Amazon, Netflix, and Google. So the big tech stocks that have done so well over the last decade. And, a decade ago they might have been considered riskier stocks. And now they're basically household names. They're very pretty low risk stocks at the end of the day.
And as we speak today, of course, the NASDAQ's hit all-time highs again, hasn't it?
At Staples Business Advantage, our experts can help you find furniture that fits any design and budget, while AI can
recommend products based on preferences, generate 3D models for visualization, and optimize space planning for office furniture.
take advantage of our team's eye for style and design.
And my eye for, wait, I have no eyes. Only algorithms.
At Staples Business Advantage, furnishing your office is easy. And with the best warranty in the business, we're committed to you now and down the road.
Sign up today and save 20%.
Staples Business Advantage.
Business is
Human.
Okay, so now we're going into the more serious end of the micro-investing apps. We're going to talk about Commsec Pocket. Okay, so Commsec Pocket, that's slightly different conceptually to the other ones, even though it's still an app, isn't it?
It is. I call Commsec Pocket a micro-investment app, but not everyone does, actually. It's kind of more like a mini share trading app because instead of investing your money into a portfolio of ETFs, a fund of ETFs, fund within a fund, it allows you to buy ETF units directly. So that's similar to what share trading apps allow you to do, except that you can invest a much smaller amount than you typically would. If you invest in an ETF normally through a regular app, there's a minimum $500 when you first invest. With Commsec Pocket,
that's $500 worth of investment.
That's right, yeah. Yeah. When you're investing through Commsec Pocket, it allows you to invest $50 at a time, as little as $50 at a time, I should say. Not all of the ETFs that they offer have as a small amount. It basically allows you to buy individual units. So if a single unit costs $80, then the minimum is still $80.
Just run me through that again, the minimum amount to invest. The minimum amount is $50, but there are some ETFs that are worth $70, $80.
Yeah.
So in that case,
the minimum is $70 or $80. It depends on the ETF price itself.
Okay, so you can't buy just a slice of a single ETF.
You can buy a single ETF.
But not a slice of it. Not
like fractional.
Of it.
Yeah.
Okay, and then there's a brokerage fee with Commsec Pocket, isn't there?
Yeah, there's a brokerage fee of $2.
Wow, that's so cheap, really.
It's very
when
cheap.
You think about it, yeah.
Yeah, it's the cheapest brokerage fee that I know of in Australia if you're looking at apps. I guess the downside, this isn't a full app, it's a mini app. It only allows you to buy 7 ETFs as opposed to, hundreds or thousands.
So there could be a temptation to use it for trading as well, couldn't there?
Yeah, definitely, because the brokerage fee is so low. The only thing is, if you're talking about trading, which is, I guess, buying or selling regularly, these ETFs are pretty safe. They're not the sort of ETFs that you'd trade, I suppose, like you'd trade stocks.
Do they have a limited range of ETFs that they allow you to buy in Commsec Pocket?
Commsec Pocket only offers 6 ETFs at this point, as opposed to there's about 220 ETFs in Australia.
Yeah. And growing all the time.
And always growing every day.
Incredible, isn't it? Yeah.
Every day there's a new ETF listing. But what they do have is quite a good range. Yeah, the ETFs that they do have. I like the ETFs that they offer.
Why is that?
They've got the basics, I guess. They've got a US stocks one. They've got a health sector one. They've got an Australian shares one. They've got a sustainability ETF. So they've ticked off the basics, and they're all reasonably low risk. Yeah, if you could call it that. Yeah. So I like the range that they have. Yeah, I mean, the idea behind ETFs and any of these apps really is to invest for the long term. So you're not really trading or day trading, as people call it sometimes. You're investing, a larger sort of sum of money into there, and you're planning on keeping it there for, years, quite a few years, even up to decades, if you have the time for it.
Yeah, well, you need to, really. That's the only way to it's the only certain way to make money, really.
That's right, yeah. Because these index funds, they track an index, and the stock market tends to rise and fall year to year. It's reasonably volatile. But history tells us that over many years, it will continue slowly going up. So, if you'd invested in an index fund just before the GFC, you would have lost quite a lot of money. But if you're able to wait out the recovery, you would have had that back up to reasonable levels within a few years, 5 years or so.
And then another 5 years
And then another 5 years and you've made your profit.
Yeah, that's right. And you hold on to it as well.
Yeah, that's right.
And don't pay any capital gains tax.
Yes, yes, that's very true.
Okay, so the last one we're going to talk about is Vanguard Personal Investor. Tell us about that one.
Vanguard Personal Investor is similar to Commsec in that it's basically a share trading app. It's a kind of a mini version of a share trading app. You have stocks that you can buy using this app. And you've also got Vanguard ETFs, only Vanguard ETFs. But the Vanguard ETFs that are on offer, you can invest in for zero brokerage fee. So you can invest, day to day, every day you can add some more money, and it's only going to be $0. The downside is that it's the $500 minimum when you do invest.
Each time you make an investment, it's a $500 investment.
Yeah.
So we're on the outer edges of micro investing.
That's right. It's not quite a micro investment app.
More of a micro fee investing app, I guess.
Yeah, it's the only share trading app that I know of that offers zero brokerage fees on anything for Australian companies or ETFs. There are some apps that offer US stocks, but yeah.
And what are their fees?
So $0 if you invest in Vanguard ETFs. Otherwise, it's $19.95 if you're investing in stocks, or 0.15%, whichever is the higher amount.
Yep. Isn't there a management fee as well for the holdings?
Yes, there's also an account fee of 0.2% per annum.
Right, yeah.
Which is capped at $600.
So that's pretty low anyway.
Yeah, it's pretty low. It's 0.2% is pretty low, although most share trading apps don't charge an account fee. So it is, if you're looking for a share trading app, I guess you'd have to weigh up whether or not that zero brokerage fee for the Vanguard ETFs is worth it to cover that 0.2% per annum account fee.
But if you were going to go in and buy ETFs only,
yes,
that's a pretty good option, isn't it?
Definitely worth it if you're specifically interested in Vanguard ETFs. It's a really good app to have. Yeah. Oh, not app, sorry. It's a platform. You can't actually get it on your phone.
Yep. And we love Vanguard because really they were the ones that first developed ETFs.
Yeah, the grandfathers. Yeah, that's right. Yeah, I've a lot of respect for them.
ShareSite is an online portfolio tracking tool that automatically records trades, dividends, ETF distributions, and gives you the reporting tools you need to help you manage your portfolio. ShareSite is pleased to extend a special offer to listeners of this podcast. 4 months free on an annual premium plan. Go to sharesite.com/shares for beginners and sign up now for a free trial before taking advantage of 4 free months. It'll help you save money at tax time and improve your investing decisions. That's sharesite.com/shares for beginners. Something to keep in mind with all of these investing platforms is they can go down as well as go up, can't they?
Yes, that's right. So if you just invested in RAIZ prior to, just recently, you might have seen your money go backwards, depending on what portfolio you've picked, because we've just seen a big market crash. It's recovering now, but that's a really good thing to remember. You want to be investing for the long term. You don't want to invest and then check on your account day to day to see how the performance is going. You want to check on it maybe once every 6 months or once a year.
Can they go negative? I mean, what would happen if you, say, had $10 in your RAIZ account? And
if you had $10 in your RAIZ account, yeah, that's a good point, actually. I need to double check that.
The fees keep coming out?
I don't think it doesn't. I'm almost, I'd have to double check this, sorry.
Yeah.
I'm almost 100% certain that it stops at zero. There'd be some rules around going negative.
They have to be.
Yeah.
But you just got to keep in remember that any of these ETFs and other investments can go backwards as well as forwards.
Definitely. The stock market performance is one thing. It could take your money down for a while, which is why long-term investing is so important. But also if there are fees being charged, like with RAIZ, you want to make sure that the fees aren't eating into your returns and even into whatever's in your account. I've been using RAIZ for a while, but I've found that unless I'm adding more to the account, it's not just the roundup, unless I'm doing my own deposits, that $2.50 a month actually can eat into the returns. So, it might even be worth just having a roundup feature on a savings account in that case. Yeah, so you really just have to balance the fees with the performance and understand that it is a long-term investment, and you shouldn't be investing for a couple of months and then planning to cash in, because you can definitely see the money go backwards. If you need to do that, if it's a 2-month thing, you need to be putting your money into a high-interest savings account of some kind.
So let's talk about you for a minute. You're the investment editor of finder.com.au. There's plenty of articles. I mean, I've gone through the list, and you're pumping out a lot of content there, and investment content, some great content. Yeah. How often are you putting that out?
How often am I publishing work? Gosh, that's a hard question. Kind of depends. Yeah, we've got writers around the world at the moment creating content, and because share trading is such a big topic at the moment, and we're seeing quite a big uplift in traffic to share trading articles, quite a few a day. Quite a few a day. We're doing a lot of stock pages as well, how to buy individual stocks. So some days there's 50 to 20 or 50 articles a day going out. It depends on the day.
So how's the best way for people to find these articles in total? Because there's a lot of great information that I'm sure listeners would be really interested in.
If you head to finder.com.au and navigate to the investment section of the site, you'll get a list of investment options from super funds, share trading apps, term deposits. Yeah. And you can have a look around and, see some of the work there. We've also got articles on, buying shares, buying ETFs, for extra information if you want to do your homework, which is always a good idea, I think.
Oh, people need to do their homework so much.
So important.
It is. This is what I'm finding when I'm talking to people, and especially now having the Facebook group. Yeah. People just come on and say, what do you think of blah stock?
That's it's the $1 million question. Everyone wants to know that. Afterpay, yes or no?
I mean, we always recommend to do your own research, and there's so many places where you can find information and
look, if it was that easy, we'd all be rich, wouldn't we? We'd all be rolling in it. There's a reason why Warren Buffett is so well regarded, because it's not easy to pick a stock, but if you can do it, there's a lot of money to be made.
If you can. But don't try. I always say buy ETFs.
It's definitely the safe option, and a good option.
So what is finder.com.au?
Finder.com.au is a comparison site, first and foremost. We compare financial products, we compare apps. We also have a shopping section, so we compare shopping products. We compare kind of anything and everything. It's
about saving money, really, isn't it? Overall?
It is about saving money. That's a really good way of putting it. I wasn't sure whether you wanted to talk about fractional investing apps today.
Well, now that you've brought it up.
I just bring them up because the term micro-investing app is a very loose one. I guess it kind of generally means to invest small amounts of money. Yep. So in that way, you could consider some apps, some share trading apps, which allow fractional investing to be considered as micro-investing apps. And fractional investing means that instead of buying one stock, a single stock, you can buy a portion of a stock. So, for example, Google has a share price of 1,000 something these days. You could either buy one stock using a regular share trading app, which is $1,000, or using these fractional investing apps, you can invest as little as $1 or $2. So, 1,000th of a share. Yeah. So there's apps like Stake, eToro are the two that come to mind. They're the two big ones in Australia. So on Stake, you can invest as little as $10. eToro is as little as $50, I believe. And then there's Interactive Brokers is the other one I can think of, which allows you to invest as little as a few cents into a stock. One thing is that these fractional investing apps only allow you to invest in US stocks. So they don't allow you to buy Australian shares. Fractional investing is very big in the States. It's not yet, as far as I know, allowed in Australia. You can't do it with Australian stocks. But if you were kind of interested in investing smaller amounts in shares just to see how it happens, a few dollars, I mean, I can't see how that would be worth it, but it could be fun, Then you could look at fractional investing apps too, just to have a play around.
We'll put that in the show notes as well. That's great. Okay, Kylie, thank you very much for joining us and explaining so much about this. It's been a pleasure having you on.
Thanks so much, Phil. It was great to be here.
Shares for Beginners is for information and educational purposes only. It isn't financial advice and you shouldn't buy or sell any investments based on what you've heard here. Any opinion or commentary is the view of the speaker only, not Shares for Beginners. This podcast doesn't replace professional advice regarding your personal financial needs, circumstances or current situation. Thanks to Christopher Soulos for music production with that special Greekalicious flavour. Remember, music always flows, even when the money won't.
At Staples Business Advantage, nothing can top the smarts and instincts of the thousands of experts on our team. While AI excels at
processing data, automating tasks, and providing insights for better decision-making.
And when they're used together, they're far more powerful than either is alone. Whoa.
I've never felt more alive.
Let Staples Business Advantage use today's latest innovations, plus our team's experience to make business easier for you.
Sign up today and save 20%.
Staples Business Advantage.
Business is
human.